Greetings and thank you so much for tuning in and checking out my channel. Today I'm going to do a review of the Bank of America stock, and it has a ticker name BAC. And before I get started, I'm just going to disclaimer that this content is not meant as investment advice. Please kindly review this and make sure that you understand before you proceed. So I'm going to quickly talk about the business model for Bank of America and their earnings highlights and all the stuff that I have highlighted on this particular slide. But before I get started, I'm Isaac Jonas, and I founded Streetwise Economics basically to share information about personal finance and investing. And I'm an economist by academic training. So Bank of America is of particular interest to me because one of the things that I do when I'm investing is I like to look up to some people like Warren Buffett and Guy Spier who have a good track record of phenomenal returns. So some of these guys from the filings that I checked out, they own this particular stock. So for me, I then go and do a deep dive to kind of understand like why are these gurus, through their funds owning this particular stock. So Bank of America is one of the largest financial institutions in the United States with more than 3 trillion in assets. So it is a bank, and they have consumer banking, global wealth and investment management, and also global banking and global markets. So it's very big, if you see like 3.0 trillion. So it's very, very interesting. So I like to understand what a company does before I even consider investing. So I can see that this is a very big bank. It is also has operations in several countries. So for me, that piques my interest in that it is diversified if it has operations in other countries. But when I look at the 52-week high, it went as high as 38.5. I was recording this today on the 12th of April 2024, but it also went as low as $24.96. So the quick things that I look at the return on invested capital 4.19. Not really something that I would like. I like maybe 15%, but banks usually they have a lower return on invested capital, especially if they are big banks that have really grown as much as Bank of America has done. Return on equity, it is about 9%. I like 15%, but for a bank, it's decent, and they don't offer a dividend from what I've seen here recently. They didn't offer, and I'm going to do a deep dive on this. But um, in terms of their past earnings, they've been able to beat earnings over the past couple of in 2023, but the last quarter they missed their earnings by minus 45.64%. So this is something for me, it's a red flag. But this year they are going to hold their annual general meeting on 25 April, but I like to check out the first quarter earnings conference call to understand what they are doing. But they will also release their earnings for the first quarter on April 18th. So that will be uh, uh, a week after this coming one. So now, when I go to the finances of any business that I want to invest, I like to understand at least the past 10 years. But I will say here, the way that I analyze banks and also other individual companies is different. But I can see that here the net income has been increasing. You can see that here it's 24 billion most recently. But also in 2023 December, they had about 24 billion 866 dollars. So you can see that this is positive. This is the income statement, right? But when I invest in a business, I want to know their long-term debt, right? But because this is a bank, deposits which clients, deposit with them, their liabilities, but they use that money to generate other income. So there is different. So I would expect them to have a lot of debt and also even liabilities. But what I like to look at is the long-term debt here. You can see that it's about 302 billion 204 302 billion actually, yeah, right? So it's quite a lot. But their liabilities, they are 2.88. They're actually basically almost, they say 3 trillion. But it's because it's a bank, right? But their cash flow, their free cash flows, when I look at them, I see they've been growing in leaps and bounds. But this rate, I don't like to see, cash flows that are negative. But when I see something like this, I go and investigate. Why did they do a lot of investments? What was really happening? And what I do is I then do the ratio of the long-term debt. I divide the free cash flows over divided by the long-term debt. And if that number, but this is a bank, right? I like that number to be less than 3. But because this is a bank, I expect the number to be bigger because they have long-term, they have liabilities. So I also want to see if there are insiders who have been selling shares. But I see this was in 23 February, so not recently. So this is a good sign that they have not been buying. But like I said, I've seen that Guys PS, Berkshire Hathaway, they own these shares. The last filing that I saw, Apple, Berkshire Hathaway, they still owned 9% in 9.03% in Bank of America. So that's a vote of thanks. And Guy Spears also in his fund, he currently owns Bank of America from the filings that I saw, right, through his fund, 11.3%. So this is something that I look at. But the key thing is to get in when it's undervalued, right? And I'll talk more about that. But when I compare Bank of America with the industry peers, right, you can see JP Morgan here, their mod score is even higher than JP Morgan. It's about the same, but for HSBC holding. But you can see here the measure, they are out of 100, 100, 100. This is good. Return on capital is good. Like I said in the past, but return on investment capital is not as high. So I like usually these numbers to be about 15%, 15%. But depending on if I manage to get in when it's really beaten down. But you can see that, like I said, this is the mod score is a very big bank, but it has a relatively good history of beating earnings. But you can see here, I would not get in right now, but you see there are moments when it was really down, like in 2020 when COVID hit, it went below like something like 20, let's say $20 a share. You see here, that was in October 13, 2023. Probably there was a major event, it went down. It's a big bank, so these are opportunities for me that I would consider buying. But because I own Berkshire Hathaway Class B shares, which also have, like I said, exposure to Bank of America, for me it means I have exposure. Right now I would not buy unless it drops to. So in conclusion, I will say that Bank of America is a very interesting stock because most of the people that I look up to, they own it. But I would like to get in, let's say if it drops to like $30 a share or even 25%, there's a major event. But right now, I would just buy in a small percentage. But like I said, I have exposure to it through Berkshire Hathaway Class B shares. So I thought I would just share this. Thank you so much for tuning in, and please kindly consider subscribing, and thank you for supporting me. Have a wonderful week, and may the markets be with you. I'm signing out for now.